Hi, I'm Malcolm Graham Wood, and I'm here at Core London doing my CEO interview. My guest today is George Lucan, the CEO of Angus Energy. Welcome back, George. Great to see you.
Very good to see you again, Malcolm.
And you appear to be in the middle of a field somewhere, under a tree. You better fill us in on this right away.
Well, I'm always out and about and talking to neighbours, making sure that everybody's happy. So, afraid it's all part of the duties of being a CEO.
Good stuff. Now, obviously, so much has been going on, and we interview quite often, but we haven't spoken for a little while. So what I really would like, I think the viewers would also like, is an up-to-date, full update from Salt Fleet B. You've recently announced some flow rates and things, but tell us about how everything is going, what the flow rates are, and how it's going at the moment, if you would.
Yeah, it's going exceptionally well. So we began producing toward the end of August. We pretty much met the hedge for this month, but I won't give great detail on that. I'm not meant to do that. But,
yeah.
But we've had now steady high rates of production for the last 6-7 days. But the first 2 weeks were slightly up and down, but still producing almost every day. What we've had now is, I think, no what we call trips. That's no outages for an hour or 2 hours or whatever at all. I think the last 4 days. So very constant production by all the equipment there, and it's all working, and it worked from day one. What things that don't work during commissioning, as people would tell you, is lots of different signals and sensors. You'll discover that they're set at the wrong level, and they need calibration, or they need changing their frequency of sensing. So all of that I think we've dealt with what you might call all the teething issues, and we're now into steady high rates of production. I look forward to advising the full detail at the end of this month, and then I think we've advised that we'll do it at the end of every quarter, so as not to be.
Okay, so tell me, is this the where the famed compressor situation is regarding the production? I hear a lot about the situation there.
Yes, that's exactly right. So the wells are definitely producing more than we expected at this point. These 2 wells are producing more than 5 million standard cubic feet. In fact, I think they could comfortably produce 7 or more. So that's fine. But the process plant, we have to get that up to, if you like, full speed. And at the heart of the process plant is essentially the compressors. They're the moving bits inside that. We have one compressor there. And it's got, if you like, the bottom end of its rated capacity is 5 million standard cubic feet, and we're easily exceeding that. What the top end is, don't actually know. I think we'd probably get to, we'll inch our way up toward the 6, I think, in the coming 6-7 days. And because we're bringing something that's been entirely refurbished, not rebuilt, into service, we're not anxious to go and, as it were, as a teenager would with a new sports car, just slam it all into 150 miles an hour. So we will take it up gently. And I can't answer the question of exactly how much it can do, but I feel pretty comfortable it will be able to do 6 at this stage. Now, the question is, when the second compressor comes on, we'd be able to, of course, do everything that these 2 wells currently do. And of course, we're hoping for the third well to be contributing. So the second compressor is rated exactly the same. And that we'd hope to bring on and have in service before year end. So actually coming onto site when the drilling's finished, and then wired in over the course of 4 or 5 weeks then.
So you can't, obviously, you can't give us any exact numbers, but for the time being, your capacity is growing sort of all the time, as it were, and with the second and then the third compressor in, have you got a published number? Are you talking about 10 or 15 million scuffs a day?
Well, with 2 compressors and a third well, this sidetrack that's due to start within 4 or so weeks, with those in place, yes, I think we'd be more than 10 million scuffs. And then the question of how much more, well, slightly depends on how much that well is giving, and how much more than 5 million scf each of those two compressors can do. The third compressor you mentioned is really only a booster. That's because we expect pressure in the wells to drop over the next few 18 months, 2 years, and therefore it's not a big compressor. It's more just to lift the pressure up a few bar so that the other two compressors work at maximal efficiency. So not too worried about that third one. We want to get the second one in, obviously, because even if the sidetrack were a dead duck, and this is the point, I don't think it will be, but people sort of say, oh, well, without sidetrack, you're dead. That's not at all true. The sidetrack there isn't there to win us new resources. It's merely accelerating the pace of extraction from a very well-known and already addressed part of the field. So we're not trying to do something new there. There will be other sidetracks which will be winning us new resources over and above those we've advertised. But this one is actually accelerating them. Now, if that sidetrack's successful and we have those the second compressor in place, well, it's quite possible we could be able to do 12 million rather than 10 million standard cubic feet. Even if the sidetrack's not successful, remember this, and we have the second compressor in place, it looks like we'll be able to do at least 6, possibly more from this one compressor, which in itself would be more than enough to cover our hedge, and there'll be no loss of value, only a loss of timing cost. But,
remind me, when does the hedge when does the hedge run out, George?
The hedge runs out in July 2025. Is that right? So we're 22, 3, 4, 5. It's a 3-year hedge, and it slightly tails off in terms of quantum to be delivered in the later years.
Understood. So, and tell me, what's the form about the condensates that you're talking about in at Salt Fleetby?
Well, I hadn't heard any talk. We're producing condensate. It's very good quality condensate. It's clean of most impurities, and we're selling that down in along the east coast to a refinery down there. We're knocking out a little bit more than we thought we would be. I think it's not a huge quantum, but it's about 60, 70 barrels a day. Don't quote me. Well, don't invest on that number. It's shifting around a lot. In the early days of well production, you get all sorts of slugging of condensate. So we don't have a reliable figure that we're quoting to the market, but it's certainly above where we expected it to be. When the third well, let's say the sidetrack is on, we're pretty sure that we'll get more than 100, 120 barrels a day, and that's more or less a little bit of a discount to crude oil. But it's nice extra income. But it's obviously the gas that is the bread and butter here.
So, what does this mean for the investors? How do you see them looking at the whole package now that you've got to first gas and you're confidently talking about upping the numbers and so on?
Well, I think either way, this is a fantastic deal. I keep on trying to focus people's minds on the long-term likely gas price across Europe. The long-term average was a sort of 40 to 50p a therm. I can't imagine that the long-term average will be anything less than 3 times that. That's our view as a board. Now, of course, right now it's more like 10 times that.
Yeah.
But it's been up to 15 times that. Okay, this is a short-term impact of accelerated buying by the French and Germans for their storage, but don't believe in any sense that the price is going back down again, because it's not. The environmental lobby has done a great job, but too good a job. People are not investing. Their institutions are not supplying capital. The supply chain is shot to pieces. Getting new fields, gas fields are immensely hazardous. Getting them online is a multi-year affair. And I don't see a sudden rush of supply coming from anywhere. And I don't see people, even if we were at peace with Russia tomorrow, agreeing to rely on Russian gas again for the next 5 or 10 years. This is serious. This is where we are. So our investors, regardless of where we do on a sidetrack or on a second compressor, are looking at an asset which is worth many multiples of our market cap on very simple arithmetic, in our view.
Yeah. Well, I certainly concur with that. Is this the next question is going to be about your other assets and how they're all slotting in. I'm getting this sort of feeling that this sort of fleet is going so well that the other assets are being slightly sort of put into a bit of a corner. But so two questions really. One is talk us through the other assets, how they're looking at the moment, but also what effect will you be affected by the government's recent announcements about onshore and the moratorium on fracking and anything else like that?
No, we won't. We're not theologically opposed to fracking. We've never engaged in it, and we've got no particular desire to. It's our issues with government policy here is unless it's crossbench support and it feeds down into local council, it's meaningless. We really need an energy policy which is supported by all parties in the House of Commons and has the buy-in of local communities and local councils and the regulatory agencies, and that isn't there. It's not enough for one person to say, oh, we support it, because we've got to go out there or our brothers in oil have to go out there and raise 10, 20, 30 million pounds from people who are looking 2 years down the line at a general election and maybe another change in policy. That's not going to work. Both the oil and the gas industry, urgent, and indeed the green industry, they need cross-party buy-in to any policy, because it's 5-year, 10-year timelines for these sorts of infrastructure upgrades. In short answer, but no effect on us.
Okay, now talk us through the rest of the portfolio.
Now the rest of the portfolio, well, Brockham is actually producing at a peak rate of 50 barrels a day. We intend to do a little bit of an intervention on a third well there, and a reperforation in the Portland. That was the disastrous Kimmeridge well of years back. And we're going to close up the Kimmeridge layer and go back into the Portland there, because it's at the crest of the structure, with the hope of doubling or trebling production there. So that's not been ignored, that one. Lidsey requires a little bit more work, but again, I'd hope that we're going to get up between the 50 and the 100 mark when we've done all our remedial work. So they're nice little producers covering overhead, and we are we've been a low-cost company. So the third site down there is Balcombe, and we're still awaiting a response from the planning inspectorate. But I'd say you rightly point out one thing. One thing we missed here is that we actually spent a tremendous amount of time and energy on geothermal work in Devon, and now that is something that with a stronger financial capital base we want to get straight back into. It was never greenwash for this company. It was a really joyful experience to be able to take drilling expertise and do something which is in line with public attitudes towards energy provision. They want something green. Here we go. We're drillers. We can give it to them. So I want to be straight back into doing substantial seismic work in Devon and ongoing planning work around the tentative land acquisitions that we've made there.
Excellent. Well, it's looking good, and one of the things that would lead on from that as well as Saltfleet is that you had a clean energy strategy at Angus, which I remember seeing. Maybe you could update us on how that's going at the moment. You're obviously making sure that you tick a lot of boxes
on clean energy. Yes, we're not doing what some of our peer group do, which is trying to be net zero by all sorts of fruity calculations. But we are endeavouring to mitigate wherever we can in terms of environmental emissions. So in particular, we've looked at smaller shallow geothermal at Saltfleet. We've got a couple of spare wells there where we can generate some heat, and we have a site power generator, currently gas-fired, which is about 0.5 megawatt, and we've already had a very thorough technical report that we can obtain that sort of heat to generate that level of electricity from the existing geothermal wells. But additionally, Malcolm, we've spoken with one entity about vertical farming, because there's a lot of opportunity around where we are in Lincolnshire to combine heated greenhouses that use our CO2 from any stray emissions in order to improve agricultural output, so fruits and particular crops. And that's again just something nice to be able to do, and commercially, if not wildly profitable, at least something that commercially will turn a profit. There's too many green projects that don't even turn a profit.
All right. I want to have a quick word. Over the year, I mean, the share price has done very well. You've chosen very good times to raise money when you needed it during the process of this year. And you've got two major shareholders. You've got Forum, we briefly mentioned, at 21%, and Aleph at 8.9%. And of course, interestingly, Aleph have now shown themselves in another stock in the sector, completely different from yourselves. But is anything going to change on that front, or are they going to remain key but dormant shareholders? Or I know one's previous management and so on. So what's the form regarding your shareholder list at the moment? Right.
Well, there's actually, Aleph also introduced a number of other investors who were counted in total for, together with Aleph's stake, for 20% alongside Forum, a little bit over. We see them as long-term providers of capital. These were a range of European family offices, each taking under 3% stakes, and they're very, very, I suppose, ultra high net worth individuals and families, and interested in taking strategic stakes in the energy space. So we're immensely pleased to have them on board. We see them as long-term shareholders. They're certainly not pump and dump. I doubt they even watch the share price more than once every 2 or 3 months. So will Aleph itself as a house thin its stake from time to time? It doesn't represent all of that 7% as beneficially. I don't know, possibly. Forum, likewise, there's a lock in there we've advertised, but they're free to sell up to a certain amount each within specified periods that we've advertised. Will they thin some of their stake? I've no doubt they will. But equally, they are of the view, and one of our members of our board, Paul Forrest, is of course the proprietor of Forum. So he's very much of the view that he sold out at an undervalue, and he did. It was a fantastic deal for Angus.
Yeah.
And he's only going to recapture some of that loss by staying in there for at least for the bulk of his stake. So we expect it, and certainly every indication I've had is that we'll have him for the long term, and he's very pleased to be there. And he's very pleased with the result today. So,
I bet he is, yeah. And balance sheet wise, you're sort of firmed up now. You're looking a lot better than you would have done some time ago.
We had a number of warrant exercises, which were quite a lot of which dated back a year or two, and I think most of them have been flushed out of the market. There may be some more which is sitting there, but the market seems to have absorbed them, and I think here's the moment where we can start to look strategically at what Angus is worth, and I do believe it is considerably more than here. And also look at the growth opportunities now. I like to think Angus is moving away from the coterie of companies at the smaller end of the aim, which I fear, as they currently exist, are undercapitalized for the task at hand. And I like to think that we have the right contacts in the capital world to continue to grow.
One before we wrap up with the final question, if I may, George, is that you've got 2 new directors and a consultant aboard, which means that you're strengthening the senior management positions very nicely. The market's impressed with that. Quick chat about who's arrived.
Yes, well, we've got Paul Forrest, the owner of Forum, who we discussed earlier, and who has a 20% stake. And he has a fair experience in oil and gas himself. Started in Victoria Gas 20, 30 years ago, 40 years ago. 30 years ago. So he's great. Chris Delecki, he's ex-BP, and we're delighted to have him as a senior independent, non-exec. But his background was head of M&A at BP's Russia joint venture. So he's an absolute a genius on the buying front. There's very little out there that's out there that he won't have looked at. So he can immediately dismiss a lot of things and get us straight to the point. And thirdly, Richard Herbert, he's not been appointed to the board. He's a senior consultant. We're very lucky to have had him. He was formerly head of exploration at BP, and he actually ran BP's Witch Farm, which gives him extraordinary benefits for Angus, because the experience there is invaluable to us. So those three have really immensely strengthened our management team, I think. So yeah.
Excellent. Well, thank you very much for that. Time has rushed through again, but if I could just ask you to do what I always do, George, is to say where you'd like to see, or where you see Angus in the next 12 to 18 months.
Right. Debt-free within 12 months for sure, if not considerably sooner. Paying a dividend within 12 months, and considerably larger within 18 months.
Fair enough. Thank you very much indeed, George.
Thank you, Marcus.
Thank you very much. I'm Malcolm Graham Wood, and here at Call London for my CEO interview. My guest today has been George Lucan, CEO of Angus Energy. I'd like to thank him for joining us, managing to keep the camera and the computer in the tree long enough to do the interview. And thank you all for watching. I look forward to seeing you again soon. Bye now.